morning, my friends. Today we are going to talk about Dropbox, ticker symbol DBX. Now, I've been watching this stock for a little while, and I've been looking for some good entry points for this stock. I'm looking a little deeper into the financials of this company, and I've come across some interesting things. For one, the short volume ratio is increasing. Now if we go to Fintel, we can see that the short volume has been increasing, and that's not necessarily something that I like to see in a stock, but it seems to be fluctuating from 5% up to 20%. It seems to be going back down as of yesterday. Now the stock could be following a cyclical pattern, and this could actually be good if we continue to buy up shares, hoping to short Dropbox, and if they continue to be unsuccessful, it will continue to drive up the stock price, hopefully along with some more good news and more people switching to this service and these services provided by Dropbox. Then we can continue to see more and more growth, and the shorts can actually push the stock up in what is called a short squeeze. Now, if we go to the SEC, we can grab the 10K and the 10Q and we can put them together, which is what I have done here. And from here, I'm looking at the balance sheet, and I can see on the current assets that they have not dramatically increased, which is great to see, and the current liabilities have also not dramatically increased, which is great to see, as well as the total liabilities and total assets. Nothing seems too dramatic. And if we go to the statement of operations, we can see the revenue has increased year over year. And in the first half of 2020, on the 10Q, we can see that they are on track to once again increase revenues, and with that, the gross profit has continued to increase. Another thing I like to see is the R&D, the research and development costs have increased year over year. It went up, it almost doubled in 2017 to 2018, and then it went down a little bit in 2019, and it's on track to remain pretty large in 2020. Now what that means is that the company continues to invest the profits back into itself, therefore growing faster and making products better, hopefully to increase the stock price at a later date. And then we can see on the basic earnings per share that the earnings have gone positive for the first time since 2017 in the first half of 2020. And then we can also look at the statement of cash flows, from where we can see that the cash flows provided from operations has continued to increase. They are on track to decrease only slightly in 2020, which, considering 2020, I'm very happy with that. As long as nothing crazy happens in the second half of 2020, we should be good. And then if we go to the cash used in investing activities, we can see that they increased dramatically the amount of cash used in investing. And if we look, we see that they purchased a lot of short-term marketable securities, and assuming that those mature, we can expect proceeds in the future. The amount of short-term investments that Dropbox is investing in has gone down in most recent years, which we can presume is because the cash provided by operations has increased and operations has become more profitable. The cash used in financing may look bad, but that is because of stock buybacks, and we can assume that that is not reoccurring. Therefore, it makes the stock we hold as investors become more valuable. I think that stock buybacks is a great use of surplus funds that Dropbox gained during the pandemic, but I would of course rather see that be used as research and development costs rather than a stock buyback. However, I'm sure that management looked into the marginal cost and marginal benefit of using that money to further research and develop new services to enhance growth prior to buying back stock. Now, as we adjust to a more remote workforce, we can assume that Dropbox will increase in prevalence and we will see more revenues from Dropbox's main services. As Peter Schwartz said in this article, we're going to learn the hard way rather quickly and by necessity. Everything that can be done remotely, we're not going back to zero afterwards, meaning that more and more work will end up going remote and less work will be done in the office, forcing companies to use services like Dropbox and some of the other players in this space, such as Google Drive or OneDrive or iCloud, something that would be cloud storage. Finally, when determining an entry point, if we look at the stock price, we can see that they have gone up and down, and their volatility has been high throughout 2020, but they've remained around $15 to $25. Therefore, I think that anything below $20 would be a good entry point for this stock. And if you needed another reason to go look at this stock, this company's CEO is the founder of the company, which I like to see because typically a founder will take more pride in the company and really go that extra mile, put in that extra effort to make the company prosper. And the company was founded in 2007, meaning they're not new to the space anymore and they have an idea of what's happening, and we continue to see growth in this space year after year, and I would say that this seems like a safe investment for your money long term. And well, that is all that I have for you today. So make it a great day and keep learning. Bye bye.